Hello retail traders. Today I want to talk about my moving averages and the sneaky snake trading strategy. Welcome to my channel. Please hit that like, and also if you'd like to subscribe and ring that bell for my future updates. I'm posting short videos of my trading strategy that I've developed in the past year. So we're going to talk about my moving averages. How to work the moving averages. I have the 21 SMA, the 50 SMA, and the 200 SMA. Also have the 9 EMA and the 51 EMA. This is the sneaky snake trading strategy. Keeps you in trades longer. You can use it as a scalping tool, you can use it as a day trade tool, and you can use it as a swing trade tool. This is a swing. Now I've been known, this is the snake right here as it comes down. I call that the snake. You can trade within the channel of the snake. Once you establish the channel, you can trade it within. It's a downward process. It's running down vertically. You can also run up vertically and trade it the other way. So we've got the 9 EMA in here that tells you if the stock's bullish or bearish. It keeps you in a trade. If it starts to dip above, you know you're ready to take the trade maybe. And if it starts to dip below it, like it is over here, you're ready to exit the trade. I like to see a full body candle break above the moving averages to guarantee me that we're looking good. If I don't see that full body candle above the moving average, then I'm still bearish. But here, for example, I'm bullish. Now that I'm starting to cut it in half, I start to become a little bearish. We did bounce up to a double top, which would have been a great exit idea. Now the 9 and the 21 have something in common. If the 9 crosses down the 21, it becomes very bearish. If the 9 crosses up the 21, it becomes very bullish, as it did right here. And then we had the breakout, boom, to the double top. You also have the 50 SMA. Now the 50 SMA is a trade. I used to use it a lot, but I've adapted to use the 51 a little bit more. It keeps me in the trades a little bit longer. As you can see, we have an exit right here. If I took this trade down here and got out at the 50, I would have got out a little too soon. That's the 50 SMA. Now if I took the trade down here on the third dip and run it up to the 51, that's another exit strategy. You take it at the 51 here at 216, run it up to the 51 EMA, and get out at 249. That's a real pretty trade. And that only happened in 4 days. Then you had a double top break, and she respected it. Now the 9 also crossed the 21 right here, which keeps it above the 21, tells you that you're still bullish. That's the blue line over the white one. That crosses the 50, and then eventually it comes up here and hits the 9, hits the 200, and that's an exit idea. You got a double top. So I took this trade down here maybe when it broke out or when it started to create a wedge. If I got in the trade here, I think I'd still be okay with it, but I would be a little bit nervous. I'd probably go ahead and get out of it if it dropped down below the 9, and then waited for it to build some kind of pattern. It needs to build a pattern once it breaks out of the snake. If it ain't an ascending triangle, if it's not a double bottom with a higher low and then a breakout like that, or if it's just a pure double bottom. And say you broke out and you got stuck in the trade, it comes down and it holds a double bottom right here at 207.63. I'm going to draw that trend line in. And this is what I always tell people that are following me. If the stock starts to dip, you could dip down to a double bottom, and then you can go ahead and add on to your trade. But if you see a higher low, which you see right here, you run that candle to that, that's a higher low. That means I'm more bullish than it would be if it dipped down to the double bottom. So I'm always watching the bodies of these candles to keep me either very into the trade or start feeling that little bearishness. So once it starts to build the pattern, the 9 crosses and stays above the 21 and rises up and then we hit the 200 SMA. The 200 SMA is basically my exit and entry idea. For example, I take this stock down here maybe on the third bottom. It starts to break out, so I'm feeling pretty good about this trade now. I broke out of the pattern. That's telling me I'm a little bullish. And then it quickly dropped right back in, and then boom, she runs right to that 200, so that's an exit idea, the 200. Now I'm going to change this just to a different time frame for now. Let's see if we can. We'll just change chart here. That's got the 51 on. Well, I'll leave it on there. 81. So this is the 1 minute chart. This is a chart that I trade off a lot. Let's say you had a breakout, pull back, and then she broke out again. Broke past the 200. You could have got out of the trade here maybe. Once it hit the 200 for a double top, and that would be the beach trade. I call it beach trade. So if you want to follow my room, I'll teach you how to take the beach trade. Here's a hammer. There's your first evidence to get in this trade. And you're in the trade the first minute of the day. You run it all the way up here. You're the first one in this trade because you recognize this here candle. But that's a different story, and we'll talk about them some other time. But if you did take this trade, you'd run it up to the 200, which would be an exit idea. Let's say you got back in it on these three crows. It went sideways for a while, and then you had some engulfing candles. Then the 9 crosses the 21 and runs up and hits the 200, and you decide to go ahead and hold it on the double top, or I would have got out, it don't matter. And then you decide to take your exit. Well, here's another trade idea. It bounces off the 200. Instead of using it as a resistance, it can also be used as a support, and take the trade off the 200 with that candle right there. That's a bullish candle. So I took that trade in a heartbeat. Same thing right here. You had the nice breakout, you got in the trade off the 200, and you just rode the channel up until the 9 started crossing down, and you got out. Maybe hit the 50 or the 51, said, I'm going to get out of this trade. And there we go again. We bounce off the 200, run it back up. I always say try to look for a correlation of a channel or some kind of pattern. For example, right here you have an ascending triangle. Okay? You have an ascending triangle right here. Well, once it broke out of that ascending triangle, it came back and found support right here, and then run it on up. So that keeps you in the trade. Let's say you're in the trade and you want to stay in it. You think it's going to go higher, and it starts to pull back on you. Well, it found respect off this here line, trend line. It found respect off the trend line. It found respect off the trend line here and bounced up a little bit. Found respect as a resistance off the trend line, off that ascending triangle. So you got to look for correlation to when you're getting in and out of these trades with these moving averages as a second confirmation. Again, you say you were down here and you hit the double bottom. You wanted to take the double bottom, you got the snake. You got the snake right there. Break out from the snake, pull back. You got a double bottom. It runs up in here to these 3 white soldiers. You hit the 200 and you get out of the trade. If you come close to the 200 to get out of the trade, it doesn't have to touch it. If you try to touch the 200, you're making a big mistake. Now you got 3 white soldiers right here, and that's probably a pretty good little bounce. Take some profit. That's an exit idea, the 3 white soldiers. So here's your snake. You hit the 200, it pulls back and hits the 50. This could be another entry idea. You take it off the 50 or the 51. Now I use this 51 also when I'm day trading or when I want to exit a swing trade. The 51 is a great, I really love this 51 EMA. If you don't have it on your chart, add it to it if you're a moving average trader. It really made me stay in the trade a lot longer, and it also made me get out of the trade a little sooner when I should at some times, because they pull back. It created this little flag. So every one of these moving averages is essential. Let's kind of go over this one little time here. We have the 9, we have the SMAs, we have the 21, the 50, and the 200. EMAs, I have the 9 and the 51. So the 9 crosses down, it's bearish. The 9 crosses up the 21, it becomes bullish. Then you use your other moving averages as resistance levels. Now on this chart here, I also added the 81. I just added the 81 just this week. I've had it on there, and I can talk about that story a little later. But I like it, I've used it, and I haven't used it that much. So I've just added it to my charts right now, and that's the 81 EMA. And for example, I'll tell you why I like it. Well, let me see here, find my watch list. I'm going to hook up the Dow. I'm going to take this to the quarterly or to the monthly. Needs a 3-year. The 81, this was back during COVID. And the reversal off the 81 right here, I just thought that was so cool. And we could pull right back down here and hit that 81 again and be a solid support and run this Dow Jones right back up. This was back during COVID when it hit. We had that big sell-off back in 2020. And once we had them 3 black crows on the monthly chart, it went ahead and run on up. Then we hit that new high, and now she's came back. So if this thing pulls back to that 81 again, EMA, might have us a good trade here for swing trading. So I really like that. We'll go back to Tesla now. So we got the 9 crossing, we talked about that. We've got the 50, which tells me if it's bullish or bearish, or I could take a good entry off the 50 SMA, like I used to do back in the old days. But I've added this 51 now, and I like it a little bit better. But see, again, it failed and landed on that 51. Made it a solid support. Now we've got the 200 SMA, which is an exit idea, or you could use it as a support idea. If it's coming down and it hits the 200, maybe would be a great idea to take a trade. See how it found resistance right up in here? The 200 SMA for approximately 5 days. Then finally broke out with a spinning top and run up to the 51 and get out of the trade. Same thing down here. I want to take it off the 51 or off the 9 and run it up to the 200 and get out of the trade. Or I took it off the third bottom of the triangle, run it up to the 51 and get out of the trade. This is pretty good big scalps. I'm talking about from 219 all the way up to 251. I want to look for confirmations. Here we have a triple top. 1, 2, 3. Get out of the trade. Pulls back to that channel again. Then we have a good run. Get out of the trade at the 200. So that's it. I kind of just wanted to run that through you. Use the 9 EMA when it crosses the 21 either way as a bullish or bearish signal. The 9 tells you if you are bullish or bearish while you're in the trade. And the 200 SMA, the 50 SMA, the 51 EMA are your good entry and exit ideas. So it's called the snake, breaks out of the channel, pulls back with a higher low, and then boom to the 200. It's a simple, easy strategy. You can use it on different time frames. And I wish you all well. And let's have a great day this coming Monday. Retail traders, Sneaky Snake Trading Strategy. Please subscribe, ring that bell so you get them future updates, and hit that like button, and please make a comment if you have something you could add to this strategy. I'd like to know. It could improve my trading abilities also. Thank you.